want to provide information regarding the SDR, or the Special Drawing Rights. But it's a good opportunity because this is coming at a time that Africa Development Bank is having the annual meeting here in Nairobi. And so there is a statement we want to read regarding the allocation, the utilization, and the need for reshaping the global financial architecture. So ladies and gentlemen, Africa Development Bank Group is currently holding its annual meeting in Nairobi, Kenya. The theme of the Group 59th Annual Assembly Meeting is Africa Transformation, the Africa Development Bank, and the reform of the global financial architecture. Actually, the theme is set against the realization that despite sustained economic growth over the past 2 decades in Africa, Africa still remains a work in progress in terms of its Agenda 2063. And as we might be aware, the bank carries both implicit and explicit responsibilities to provide the necessary development for financing of economic growth in Africa and social progress for Africa countries. As a civil society group, we ask that the bank should position itself as an important player when it comes to the need to influence changes at the global financial architecture, including the need for SDR allocation and rechanneling process. As of 2024, 9 Africa states or countries are in debt distress. A further 15 of these countries are at high risk, and 14 are at moderate risk. Remember, out of $10 collected in Africa, between $6 to $8 goes to debt repayment and debt servicing. Thus, it is impossible to service some of the basic needs in Africa, including education, health, and social protection. While these are happening, the loop-sided global financial architecture remains unsolved or unresponsive to Africa needs, which is evidently seen or was seen during the issuing of the Special Drawing Right in 2021 that saw Africa only receiving 33 billion, which is just 5% of the total 650 billion that was issued. And this is in comparison to some of developed economies, including USA as a country receiving 16.5%, compared to Africa as a whole receiving just 5%. We therefore believe that there is need to relook onto the financial global architecture that will allow the SDR to be rechanneled on the need basis and looking onto the economic needs of the countries in the developing economies.
So the IMF quota allocation system, which predetermines SDR allocations, affirms the predisposition of an unfair global system that favors developed countries over developing countries in financial and decision making. In addition, while African countries benefited from their SDR allocations to boost their liquidity reserves, many more spent it on debt repayment. At least 35 countries spent $14 billion to pay down debt due to IMF, while it could have been used to buffer it from the difficult economic period at the time of COVID-19. And so a reform of the global financial architecture, therefore, becomes necessary to unlock the potential of SDRs towards economic transformation, especially for countries that are in most need and the most vulnerable to climate shocks. It is therefore against this background that African perspectives should be included in a call for reform of the Special Drawing Rights Allocation system, and is in relation to the need to ensure that it is fit for the purpose. As such, we, AFRODAD, ACOA Uchumi Coalition, and our partners who include AERC, MEGN in Malawi, ANIJ in Nigeria, UDN in Uganda, CTPD in Zambia, TISA in Kenya, CROSET in Chad, and LAREM in Senegal, we front the following demands.
So one of our demands, the African Development Bank has proposed a new tool called the Hybrid Capital Instrument, that is HCI. According to AFDB, this tool will enable the bank to multiply the SDR contributions by 3 or 4 times and keep them at the IMF as part of its balance sheet. The bank will then borrow the money in hard currencies from capital markets and lend it to members in their preferred currency. And so with the increased debt crisis in Africa, it leaves a lot to be answered by AFDB in the criteria and system, whether it will act as a loan facility in distributing SDRs to its member states, or rechanneling at 0 interest rate. We believe that there is need to allocate the SDRs on a country's need basis and sectoral basis in order to provide a niche for development acceleration in Africa. The second demand is that African Development Bank should continue championing for the reform on SDR's allocation system to reflect the need rather than the economic might. This is because with the appropriate use of SDRs, it will help to resolve liquidity problems at best, but most importantly, the emphasis needs to be given to a comprehensive debt management strategy geared to minimize the debt crisis in Africa. So reforming it to include factors like indebtedness and poverty would ensure a fairer allocation of SDRs based on countries' challenges. For instance, there's need to expand the scope of the SDR quota system beyond the GDP. Available reports estimate that Africa countries utilized 85 of their allocated SDRs in 2021 compared to their development counterparts. So this demonstrates that there is a need for a review of the SDR quota system to take into considerations the development needs of each country or region with regards to this SDR allocation.
We are also calling on international financial institutions and the developed countries to commit to an open and transparent financial system that would promote inclusive growth. However, debt settlement in Africa, especially outside the Paris Club processes, has often experienced problems and delays with costly economic consequences. There is a need to adopt urgent reforms around the SDR's allocation, governance, and reporting framework. The SDR allocation comes as a general reserve that is tied to no specific development purposes. This makes it difficult to track and report its uses. Besides changing the quota formula, institutional reforms on how the International Monetary Fund operates the SDRs should be given greater attention to shift the lopsided global financial architecture to work for all economies equally.
In the year 2021, there was a general allocation of special drawing rights that was done by IMF to help countries during the COVID-19 crisis or pandemic to help them boost their liquidity or the reserves. And out of the amount that was given, Africa as a whole only received 5% of that, which is equivalent to 33 billion. And when you compare that with some of the developed economies, which I talked about before, you can see the inequity in terms of the allocation. And I know the allocation is generally given in terms of the economic might and the GDP of the countries. And that's why when you compare, for example, a country like Kenya, you know, you look at its GDP, you compare with the GDP of a developed country like USA, you'll realize that they're ahead of us. And that makes them to receive the high amount. But this is historical because those who need much of the financial assistance or the finances to develop the economies don't get it. The report given by UNCTAD just last year provided that Africa by 2025 will be spending at least 75% of its resources to pay debt and to service debt. So that should tell you that we only made like 20% to service some of our basic needs like education, health, and we can ask ourselves whether this will allow us to achieve the Agenda 2063 and the SDG goals that we are talking about, and to allow us to compete with these countries. And so that is why we saw it important that while there is a meeting here in Nairobi, which we really appreciate because it has allowed policymakers, different teams from the multinational banks to come and brainstorm on the need of how to make Africa champion for some of its development goals. We believe that this meeting will be productive and give opportunity for the bank, for the states, and Africa as a whole to go as a team to ask and champion for the need of its for the need of its growth. Africa Union, AU, just joined the G20, and we believe these are some of the areas to which we can consider when it comes to Africa being on the table to discuss and ask for the equal treatment compared to the developed economies. So I think, in short, what we are asking, that the SDR allocation should be considered on a need basis, looking on to countries that need the most, and at the same time, there is a need to restructure the global financial architecture, because Africa is nowhere to be seen on the table. But at this point, we believe that we are going to take a new dimension to allow Africa to champion for some of its development agenda using the same strategy. Yes, so I think that is the summary of what I can give in terms of what we have done.
The issue we are looking at here first, special drawing rights. We have general allocation, we also have special allocation. For 2021, what happened was that it was general allocation to all countries within the IMF. Now, the IMF gives countries sovereignty to manage how they use their SDR allocations. A country like Nigeria used its allocation, $3.35 billion worth of the SDR, to shore up its reserve up until today. So they did not use it to support budget. They left it in the Central Bank of Nigeria to support the external reserve of Nigeria. So when you hear today that external reserve of Nigeria is $34 billion, 3.35 billion of that figure represents the SDR allocated in 2020. Now, the idea of doing that is because they want to be able to still have imports, to also be able to show off the local currency, the naira, and then also to be able to attract foreign direct investments into the country. But for a country like Ghana, they decided to use their $1 billion allocation to finance their budget. 90% of the SDR was allocated to Ghana Care Project, which had to do with social protection, health, and all of that. So it didn't quite come with conditionality. But that is not to say that some other facilities that the IMF gives does not come with conditionality. They do come with conditionality. They come with conditionalities because the man, he who pays the piper dictates the tune. He will tell you what condition on which I'm giving you this X amount. So if you are in agreement, you sign the documents, and then the lender gives to you. So that's what happens. The only thing is that, unfortunately for Africa, most of our governments, they are just interested in getting the money. They put their pen to paper without understanding deeply those conditionalities. All they are interested in how to get the money. And once they get the money, they spend it recklessly in Africa. That's what's going on. African leaders are not transparent. They are not accountable in the way they utilize those facilities that they receive. There's a need for African governments to turn a new leaf, for the rest of the world to take Africa seriously. The African leaders need to be transparent. They need to be accountable, whatever facility they are incurring on behalf of the people of Africa. The Kenyan government must give account of whatever it receives on behalf of the people of Kenya. The Nigerian government must account for whatever it receives on behalf of the people of Nigeria. And that same applies to all other countries. That is only when the people will take us seriously.
Yeah, and maybe just before I touch on that, I just wanted to compliment what my colleague was saying about the IMF loan conditions. For example, we see, and generally loans from IMF, including those for response to COVID-19, while we see that these loans are usually concessional and cheaper, sometimes interest-free. For example, the extended credit facility for Uganda, that was interest-free. But we see that they will rarely give funds that are adequate for a country that is developing, like African countries, to be able to invest in, for instance, their infrastructure. We've seen our countries have to do a lot of infrastructure investments to be able to boost productivity and, work towards economic development. And that level of funding or loans you cannot get from the IMF and most of these multilateral lenders. And so this has ultimately forced some of our African countries, most of them, to go the non-concessional way, to go for commercial debt, because you will access enough funds to be able to finance some of these needs as a country. And so, like my colleague said, you'll find that when we acquire this credit, which is expensive, the commercial terms, it is usually shorter term, then we misuse it. We do not generate the commensurate return to be able to pay back. And so that is why you see most of the African countries have been caught in a debt trap, if I should call it that. And so to the next question on the survival for the fittest, how do we then engage these institutions at the international level? The approach definitely will matter. We cannot demand, because as it is, the structure of the IMF quotas and it dictates that your muscle or your might economically will entitle you to either a high share or a smaller share. But the angle that we are bringing in is these institutions and countries are all subscribers, for instance, to the SDGs, the Sustainable Development Goals. And if they are fronting development that is leaving no one behind, we want to see them walk the talk. And so this is where